Good afternoon, respected member of the Recruitment Committee. My name is Enan. I am very honored and grateful to have the opportunity to stand here today. I hope to have the opportunity to contribute my knowledge in teaching and research and to accompany the university in its future development. Today, I will present a short lecture from the course Advanced Financial Accounting 1, focusing on the recognition principles and the initial cost of tangible fixed assets. The concepts are important because fixed assets usually represent a large part of a company's long-term investment, especially in manufacturing businesses. To begin my lecture, I will overview my presentation. My presentation consists of three main parts. First, I will introduce the legal framework. Second, I will talk about the recognition principle. Finally, I will focus on how to determine their initial cost. Let's begin with the legal framework, which sets the foundation for how we recognize these assets. It is important to understand the legal framework. In Vietnam, the main regulations include VAS 3 tangible fixed assets, which provide basic principles for recognition, measurement, and depreciation. Circular 99/2025 provides detailed accounting guidance for business, while Circular 45 in 2013 regulates the management, use and depreciation of fixed assets. Besides Vietnam regulations, there is also an important international standard, which is IAS 16, Property, Plant, and Equipment. Now, let's move to the recognition principle of tangible fixed assets. First, let me start with a simple question. What kind of assets does a manufacturing company need to operate? Typical assets of a manufacturing company include machines, equipment, building, and production facility. These assets are used to support production activity over a long period of time. Now, another question. What is the difference between inventory and machinery? Inventory is purchased mainly for resale or for use in production, and it is usually consumed within a short time. In contrast, machines are used many times in production and provide benefits over many years. Therefore, they are classified as tangible fixed assets. So we can see some common characteristics of tangible fixed assets. First, they have a physical form, meaning they can be seen and touched. Second, they are used for long-term operation, typically more than 1 year. Third, they are not held for sale in the normal course of business, but are used to support production activities. Finally, they usually have high value. It is also important to know that under Vietnam accounting regulation, a perennial plant and working animal are also recognized as tangible fixed assets and are accounted for under Account 215 biological assets. After understanding the characteristics, we now move to the recognition principle for tangible fixed assets under Vietnam accounting regulation. Recognition requires that 4 conditions be satisfied. First, the asset must generate future economic benefits for the company. This means the asset helps the company produce goods or provide service in the future. Second, the cost of the asset must be measured reliably. In other words, the business must be able to determine the value of assets clearly. Third, the asset must have a useful life of more than 1 year. Finally, the assets must meet the minimum value requirement, which is currently 30 million Vietnamese dongs or more according to Vietnamese regulations. If an asset satisfies all the criteria, it can be recognized as a tangible fixed asset in accounting. After recognizing the asset, the next question, how do we determine its initial cost? According to accounting principles, a fixed asset recorded at its initial cost. The initial cost includes all costs necessary to bring the asset to the location and condition ready for use. There are 3 main components. First is the purchase price, which is the amount paid to acquire the asset. Second are non-refundable taxes, such as import tax. Third, costs directly attributable to bringing the asset into operation, such as transportation, installation, testing, and professional fees. Note: when a company purchases real estate, it must separate the land use rights and the building. Land use rights are recorded as intangible fixed assets, while the building is recorded as a tangible fixed asset. Let's look at a simple example. A company purchases a machine with the following costs. To determine the initial cost, we add all costs necessary to prepare the asset for use. Therefore, the initial cost of this machinery will be 540 million. And now, let me ask a question. Should employee training costs be included in the initial cost? The answer is no. Training costs are not necessary to bring the asset to its operating condition, so they are recorded as an expense of the period, not as part of the asset cost.